In my eternal quest to find out as much as possible about the stock market, day trading, and futures, I recently reached out to Matt Zimberg, who is the CEO of Optimus Futures. He's been in the business for over 20 years, dealing with institutional investors, dealing with retail investors, dealing with basically everything from A to Z in terms of investing in the stock market. So I wanted to get some more advice from Matt, and I also wanted to share with you guys some of those responses to some of the most popular questions that he receives as a broker. Now, you probably won't be surprised by the top 3 questions that he receives, but I thought the answers were very clear and very cut and dry on things that you need to do really as a trader, not so much, futures or whatever you're trading. These 3 questions really apply to anybody and everybody, from a beginner to an expert trader. So let's jump over there and find out more information from Matt about these top 3 most popular questions that he receives as a broker in the stock market.
One of the questions that I get the most from beginner traders is, what is the best platform? Well, I want to answer it in a different way. Here's the approach. The approach is, let's say that somebody is a very profitable trader, and one day the software goes out of business. It's no longer available. I would say, unless it's very, very specific software that did very, very specific things, I would say it would take him anywhere from a week to 3 weeks to find a new platform and start executing on it. The notion of the best does not exist. A lot of traders follow questions like, what do most use? Don't go with that. When you're a beginner trader, just learn to execute on risk management. And 99% of the platforms out there just do that. They have a chart, they have a DOM, they have quotes, and the rest is up to you. Don't think for a minute that there is a platform which is better than others. When you choose anything, honestly, start executing. Something reasonable, stable, and good will help you with that. But don't think you're making a bad choice, because I find that even when people go and open an account and we give them the platform, sometimes they have second thoughts, thinking, did I choose the right platform? Maybe I didn't do enough research. As you progress as a trader, you will find that you might need a different platform. Let me give you an example. So, in Optimus Flow, for example, we have order flow analysis. But not everybody needs it. There's customers who say, I need execution. So I find that good traders need a very stable solution, simple way to execute orders, and this is how they do it. So the notion of choosing the best from day one does not exist. Learn to execute, learn the volatility of the markets, trust yourself that over time, as you progress and you learn to be a trader, you will find the right platform for you. You might, after 3 months, for example, look for a certain feature, right? And that platform might not have it. You might call us and say, does this feature, where can I find it on this platform? If we don't have it, then we can move to a different platform. But again, the focus of platform and the best should not preoccupy you when you choose a technology. A lot of people ask, and I see it not only asking me, but I see it on forums, I see it on chats or anywhere else, is what is the best strategy for day trading, right? This is probably the number one. And strategy, first of all, you have to understand one thing. There is no such thing as best strategy, because every strategy is very unique. You will never find a platform, or I should say a method, that fits all markets all the time. That's number one. As a trader, you will evolve and you will have to have a system that's dynamic. Let me give you an example. You might have the same method, but as the volatility increases and decreases, the risk management and the cash management might change. That's one thing. The second thing is that trading is a very individual thing. You really, really have to believe it. It's not a group sport. This is not a marathon that you run with others. This is very individual, and this is you playing chess against the market. You have your own psychology, you have your own maneuvers, and just like a chess game that you probably have millions of maneuvers out there, you have to find your own maneuver. You have to stop chasing this question, what is the best? What would really happen if you believe in that notion that there is the best? Here are the mistakes that you will do over the years. First of all, you will jump from one method to another. Every time you start a method and every time you lose a method, you will basically say, this is not the right method, I'm going to try something else. And one thing I would have to say in that notion is that every single method will have drawdowns. Every single method that you trade will at some point have losses that you don't like. If you don't believe me, then go and open performance of hedge funds or commodity trading advisors that have been around for 20 years or even a decade. Look at their monthly performance. Look at what they've been through. Look at the drawdowns that they've been through. I guarantee you that those people who are successful and have a positive track record after 10 years, and it's documented and you can actually check and they're licensed, I guarantee you that they did not, I should say, I can't guarantee anything, but in my personal opinion, and I believe in it very strongly, they're not the kind of people who changed a method every single time. They may do certain tweaking and adjusting, but essentially they trade the same method over the years, adjusting according to the risk, right? So when you choose a method, start trading something that you're comfortable with, something that fits your risk tolerance. Not all of us have the same risk tolerance. We're all different players, right? Do something that fits you. You might be the kind of guy that might want to trade once a day. You might be the kind of guy who wants to trade 100 times a day or 50 times a day. Or you might decide that day trading is not for you and you need to look at longer term trends. But what will happen when you stick with one method and you really try to evolve it? What will happen is that you will see what happens to this method during good times and during bad times. And you'll be able to adjust it accordingly. Running to the internet every single time, getting a new educator. The worst is when you jump from one asset to another, where people say, you know what, I'm not going to do futures. I'm going to do equity options. Forget equity options, I'm going to ETFs. They're better. It's not about the instrument. It's really finding yourself in this universe of trading, finding your own unique spot. It's not easy. Trading, it's very hard. Trading is very challenging, and you're up against some of the brightest people in the world. But I guarantee you one thing, those people are extremely organized. Those people focus on a method, they try to perfect their method that they have, and not just delete it one day and say, okay, I'm starting fresh. That's not gonna work, because the people who do that, they just keep on replenishing their accounts over and over again. So again, don't chase the crowds and finding a method, find your own, look at the chart. Look back 30 days, look back 60 days. Make your own observations, write them down. Your observations are the observations that are right for you. Trade according to that. Develop your signals according to your observation. Develop a risk management according to your nature. Nobody's chasing you. Definitely Optimus Futures, if you're our customers, we let you operate in your own spirit. But you should not be under pressure from anyone to grow this account immediately. Rather, your goal is to preserve the capital. You have to learn how to preserve. And the second stage is grow it incrementally. That's your goal. So when you're looking for the best instrument to trade, there's a number of things that you should look at. One, you should look at the leverage of that contract, right? What's every point worth? Because that is really relatively to your level of capital that you're investing. The second thing that you have to look at is volatility, not just day-to-day volatility. Markets, I've been reading and from what I see, most of the time they don't trend. So they're kind of in a sideways market. But there are extreme days to those markets that can occur maybe every quarter, maybe they occur every 2 weeks. So you have to realize that these markets, maybe you shouldn't trade them during the time. So when you choose a market to trade, look at the volatility and look at the leverage. Let me give you an example. There's a daily chart, right? You can look at a daily chart and go back a number of years and see the high and the low in that kind of contract and then multiply the high and the low by the leverage, right? What every point is worth on the range of the day. It will give you an idea of what kind of volatility and whether it fits you. There is no perfect contract. I'm going to tell you right now, you might find that gold is for you, you might find that crude oil is for you, E-mini or NASDAQ. Now, There is nothing wrong with trading a number of contracts. But again, let's get this notion that there is a best instrument for day trading. It doesn't exist. Again, it's finding your own individual niche. It's finding which contracts you can trade the leverage. So for example, let's say that you decide that the micro NASDAQ is a great contract to trade for you individually, and also the gold market. So now you have two markets that you can go back and forth depending on the volatility, right? You can trade 3 to 4 contracts, and you can trade one contract, which is also fine. If it's frustrating for you to trade other contracts, I have some traders that just like the 10-year notes. They love this contract. I don't know why, but it fits their nature. So, and when the market gets a little bit extreme, well, sometimes they don't trade that market. So don't get the notion that if you choose an instrument, it's a must trade every day. You can trade markets at your own risk, at your own time, at your own leisure. Again, nobody here at Optimus Futures is chasing you to trade that. But again, find your own individual niche. Even if you decide not to day trade and you decide to trade on a longer term basis, there's other contracts that are trending based on supply and demand. You have grain contracts, you have meat markets, you have softs, you have currencies that sometimes trend over time. So again, choose a market that you like and choose it according to your nature. If you're a day trader, you're looking for a lot of activity, choose maybe the stock indices because they're very volatile. If you're looking to be a day trader, but you're not looking to trade a lot throughout the day, you can choose contracts like 10-year notes. Whatever the contract is, it fits you, the right contract for you, and never get the notion that it's the wrong contract to trade.
If you're still watching this video, don't worry. There's a lot more videos right here on the #1 day trading channel for you to check out and learn more about day trading. So don't be afraid and check out these videos right over here. 1, 2, newest and latest and greatest videos for you to check out. Also, hit that subscribe button down below if you haven't already.